I don't care who you are. If you are an able-bodied American, you can save $25,000 in 2 years. It's like, how can I continue the cash flow but own less? Cash flow more, own less. We're all commit kind of sins of inaction where we don't contribute in the way that we should or that we know we can. And I was 26 with no money, experience, or assets. And so I figured I'm going to give this a year, just like I gave the last two businesses a year. And if I fail, then what's the worst that could happen? I'm a 27-year-old now with no money or experience or assets.
All right, guys, super excited today. We've got a special guest for you, Jan Wanot. You may know him locally. He's a big-time real estate investor. Started out one of the largest Facebook groups, if not the largest in the state of Washington around real estate investing, called WARI. If you're not a member, go check it out. Also one of the bigger mobile home park investors, not only in the state of Washington, but around the country. So, there's just so much that I'm excited to take away today, have Jan on, share a little bit about what's helped him get to where he is today. We'll talk about how many doors he's gotten to, how what his portfolio looks like, where he's focusing his time, and ultimately, looking for different things that we can provide you so that you can also get in that same space. And whether it's your first deal or your 10th, I believe that there's something that you can take away today. So thank you guys for joining, and thank you, Jan, for being here.
Hell yeah. Thanks for having me, Ian. I appreciate it.
Yeah. So this is the third instance of the Ian Loves Real Estate podcast. But we're super excited to have you. Tell us a little bit about maybe, I met you first back in 2016 at a investors club meetup when I was first getting into syndication type deals, and you kind of wanted to grow my portfolio there. At the time, you were still, working a W-2 and kind of getting to the point where you were thinking outside the box on how you could get out of that. But before we kind of dive into, your post W-2 freedom life, real estate life, tell us a little bit about, growing up. Did you have a real estate mentor did you know you were going to go real estate when you were younger? Maybe just tell us a little bit about kind of your upbringing and, before you got into real estate.
Sure. And I remember meeting you because I put your name into my phone as Ian Love, potential partner. And unfortunately, we never did partner, but I hope we do someday in the future. Yeah. But I just remember being very hungry and going to all the meetups and wanting to learn all the things and meet all the people. And so you've definitely had an impact. And just watching you grow has been really cool. So thanks for having me. And yeah, I got started. Well, let's go back to the beginning.
Yeah.
Let's go back to the beginning. I was born in Poland. I'm a Polish immigrant. Been in America since I was 7. Came here, spoke not a lick of English. They just sat me in a English classroom, and I just was kind of thrown into the deep end. And guess what? That's where the best learning is done. So I was conversational in English within a couple months, and I progressed through school. I did pretty well in school until it became a bit not so engaging in high school. I just got a bit distracted, and there was some issues at home, and got wrapped up into hanging out with the wrong people, got into a little bit too much experimentation, and really, struggled with addiction throughout a lot of my teenage years and even into adulthood. And so that was difficult, but honestly, part of the reason that I'm clean and sober now is my mission and my vision in real estate investment, which is to provide clean, safe, and affordable housing to 10,000 humans. And so having something that I'm driving towards and moving towards allows me to not focus so much on running away from something else, right? We can move towards something or we can run away from something. And I can assure you that moving towards something that you define instead of running from something that you may be scared of or something that's difficult, moving towards something is a lot better, and you're going to be a lot happier with it. And so, I think we'll save that for the end of the show,
Yeah.
but that's really, that's at the crux and at the core of why I'm obsessed with real estate investment, because it's such a great vehicle for defining a vision and creating good in a community, and for your own life and for your family's life, in a structured way.
Wow, that's incredible. I mean, you hit on a lot of key points there, just in terms of not running away from something, but running towards something. And, not only replacing those bad habits or the things that, are maybe negative, but you're replacing them with good habits, but also a community of like-minded individuals. And you're helping, like the 10,000, people. You said the 10,000, you want to create housing for 10,000?
Correct. Yeah. We grew up, with being kind of being immigrants to America. And then my parents splitting shortly after. I mean, my single mom raised 3 boys on like a $40,000 a year salary. And so we grew up very poor, Section 8 and food stamps. And it never felt like we were poor, but we shopped at Goodwill and Ross and not at like a department store. And so there was some signs, right? Like I had to get a ticket to get my lunch, right? I didn't like pay for my lunch. I got it for free. And so there were some signs. And so we grew up poor, and we had some not so great landlords. We had people that I felt like took advantage of us or just didn't care about the property. We had a unit flood, and they didn't give us a new place to live. They were just like, here's some fans. We just lived in this kind of muck for weeks. And so it's like I had experiences that really marred my experience as a tenant. And I try to not be that. We come in when we purchase assets, and we take care of safety and habitability issues immediately. We're trying to provide a space for young families to get a start in this country, just like I would have loved to have, right? Just a clean, safe, affordable place to call home that you can kind of build a basis around and try to take your life to the next level.
Right.
We all start somewhere. And so we grew up poor, and so that's kind of, one of my goals now is just to do better than the people that I rented from and do better than the people that we purchased properties from. Is just do better for our community and for the world.
Yeah, well, you make a good name for landlords, because I know all over Instagram or social media, there's a lot of people bashing on landlords and how they're, the worst. And there are bad landlords out there, don't get me wrong, like the ones you had, growing up. But there are just so many more good landlords in my, my experience, that really do want to, take care of their tenants. And it's not all about just making as much money as possible. So, thank you for, helping make a good name for fellow landlords out there.
It's the least we can do. And and ultimately, beyond just being what feels right, if people know they're getting a good deal at your property, they're going to stay with you longer. So it makes good business sense too, right? Guess what? Happier people pay their rent on time better.
Right.
I mean, it's a win all around. So I think if you just show people basic levels of respect and respond to maintenance requests quickly and make sure there's no riffraff happening in the community or in your building, then everyone's going to be better off.
Right. I agree totally. So when you were starting out, you mentioned, or we kind of dove right into the real estate and how that has helped you impact positive. How have you impact people positively? But I do know you when I met you, you were working a W-2, you had a great job.
Right.
So I would imagine you were kind of going the work hard in school route, get a good job, and kind of work your way up. Was it an engineering job, or kind of what was your background, and what did you originally intend before you jumped right into real estate when I had met you back then?
Sure. Yeah. So, I finished high school. I went to UW, University of Washington, and I always liked business. So I studied business, and towards the end of my 4-year degree, they're like, okay, you should really start joining some extracurricular activities and start looking for a job. And so I went off and met some great people that run a program called Washington Business Week, where mid-level career folks from corporations like Amazon, Microsoft, Boeing go and to a high school kind of summer camp, if you will, a business summer camp, and get a group of 8 to 10 high school kids and lead them through a week of designing a new product and pitching it to investors, as well as like running a virtual company. So I did this Washington Business Week, even though I was the only one that was 21 years old and not actually in the working world. I had some business experience, and so someone took a shot on me, right? I went out there, I met the right people, I shook the right hands, and someone took a shot and said, yeah, sure, let's try it in Washington. If you do well, we actually would like you to go to Poland and help us like kick off Poland Business Week, this kind of expansion. So my team in Washington won, even though all the other company advisors were like mid-level career folks and I'm sure great leaders, but I happened to have a knack for it. And people saw me just shining in my space. I love sharing, I love giving, I love teaching. And so it was an obvious place for me to shine. And so they sent me to Poland, and my teams did really well there too. And I got to rub elbows with middle management and upper management at Microsoft and Boeing and all of these great corporations in the local Seattle area. And when I got back after because didn't have much money at the time, in order to go to Poland and volunteer for 4 weeks in a row, I just said like, let's go all in, right? I had to sell my Honda. And so when I got back, I had no car, but people knew I was committed and I was looking for work, and I had multiple offers for jobs when I got back because, again, people saw me in my element, right? You have to find something that lights you up and spend time doing that, because as soon as people see you lit up, excited, like glowing, they're going to be like, I want that on my team, right? And so that's what happened. I had multiple offers and I chose to go with Boeing, and there was a really great leadership development program where I got to try 6 different jobs over the course of 2 years and got to do accounting, and I got to do financial reconciliation in Germany, and I got to do airplane sales in Northeast Asia and commercial contracts in Latin America. And I got to travel around and had this really cool job at Boeing. But the problem, of course, as you know, with working a corporate job forever, is that your boss always wants you to do more things. And it's not always things that you think are important or valuable or in a way that you would do them. You have to answer to somebody else that is defining the vision. And I didn't like that.
Yep.
I wanted to define a vision.
For sure.
I wanted to do things how I thought I could create the most value. And I just didn't see a path to real financial freedom after working the corporate life for a few years. And so that's when I started thinking, man, I got to figure out a different way. I have to find something else. So in my spare time, nights and weekends, you have a 9 to 5, you better get yourself a 5 to 9 if you want a better life. And so 5 to 9 in weekends, I tried starting a business, creating this kind of unique backpack product, and built a team around it. And I had an industrial designer and I had an electrical engineer. There was going to be some cool electrical components, and it failed, but I gave it an honest effort. And I failed at another business, but I gave it an honest effort. And then I said, okay, I'll try renovating a house and renting it. Let's see how that goes. So I just jumped in, and I would give things an honest effort before quitting, right? At least a year. I would try something for a year. And so during my time at Boeing, I said, okay, I'm going to go find this first house. So I started going to all the meetups, like where you and I met, right? Yep. And it's a great idea. I mean, would you agree that people go to meetups when they're just getting started?
Yeah, I mean, when I went, like I was saying, I had been investing for about 5 years, from 2011 to 2016, and I was pretty well versed at the time with the small multifamily, kind of the house hacking, buy a property every year or two and just kind of scale slowly. But when I was going to those meetups at the time, I was intentional about why I was going. I was going to meet other people that were doing larger apartment deals or syndications, essentially.
Right.
But what I realized, and what you're kind of alluding to, is the people at those meetups are all there for different reasons. But as long as you're going intentionally and you're vocal about what you're looking for, then you're going to find the people at those meetups that are like-minded or that are at the same place. or that can kind of help you, or that you can help them in their real estate journey. So,
Right.
or you might find something that you didn't even realize that, was a great idea.
Sure.
So like, for instance, the zoning changes or things like that, you might trigger an idea in the local area. But, for when you were, did you already have any deals when we met back in 2016 or?
You know what? So 2016, I was at Boeing and I was doing my thing, but also looking for that first deal. And so I'd go to all the meetups and people would say, Jan, what do you want to buy? And I'm like, just send me everything.
Yep.
And nobody sent me anything because I didn't know what I wanted. And so that's when I realized, I have to define my criteria, right? So you got to pick a location. You have to pick an asset class. You have to pick kind of a general price range that you can operate in. You have to pick an exit strategy, and you have to have some profit metrics that you're targeting. That's how you define criteria, those 5 things. So I was like, okay, I want to buy single or small multifamily in central Tacoma, under $500,000, with $500 a month in cash flow. And these are just going to be long-term buy and hold rentals. I can buy them with owner-occupied loans, right? Rehab loans. So that's what I define as my criteria. And guess what? I found that on Craigslist, of all places. My first deal I found on Craigslist at the end of 2016, around when we met.
Okay.
And the importance of defining your criteria is that that's all I told people I wanted, and that's all I looked for on Redfin, Zillow, Craigslist. I shared it on Facebook, everywhere. And so now when people ask me at meetups, hey, what do you want to buy? Exactly this. And so no one's going to think of you if you're just like, send me everything. But if you say, hey, guess what? I buy hotel deals on Maui. Right. People are going to be like, I should send it to that guy.
Yeah.
Right? As soon as they find a hotel deal on Maui, they're going to be like, oh man, someone told me they want exactly that. And so that's an important part in the beginning, is picking something and sticking to it.
Right. When you were looking for those first deals, were you looking for anything with like a value add component, or, something that you could go in and create that sweat equity on? Or were you kind of just trying to get your foot in the door on something that you could maybe rent out a room, house hack? Kind of, did you have any, or did you know at the time, were you that clear? I know you were pretty clear on your 5 things, but, you just curious if you were looking for something that was more move-in ready, or if you were ready to put in some work on it.
Sure. Yeah, you're told by everybody, find something that you can add value to. Find something under market value. Okay, I can do that. I'm not trying to reinvent the wheel here. Let's just copy what I know is working for successful people. So I'm like, okay, I want something with a little bit of value add opportunity, and I want something under market value. And so I definitely was looking for something that met those general kind of criteria as well.
Yeah.
And so I figured, I don't know what I'm doing, so let me start with a lighter renovation. Now, these are fewer and further in between each year, but of course, there's still light rehabs out there. And so I did a $30K renovation, owner-occupied loan. This was a 5% down owner-occupied loan, rehab loan. This was a 10% down home-style renovation loan. And my total cash into that deal was only $9,300 to buy a house, and the bank gave me all of the money to renovate it. They gave me $15,000 at closing and $15,000 when I finished the rehab. It was a 2-month rehab. Wow. And so, of course, this is 2016. So this don't listen to the number so much. Just know that you can get 3.5% or 5% or 10% down renovation loans if you're willing to live in the house,
right,
or the duplex or the fourplex. And people think they need hundreds of thousands, or that my parents were wealthy. No. My mom made $40,000 a year with 3 kids. So you can start with very little or nothing, and with the right skill set, get into a property and a little bit of savings. I mean, what's 5% of $1 million? $50,000, right? What's 5% of $500K? It's only $25,000. Like, I don't care who you are. If you are an able-bodied American, you can save $25,000 in 2 years. Don't tell me you can't save $1,000 a month. If you work really hard and you are really frugal, you can save $1,000 a month. And in 2 years, you can be into a $500,000 asset. Guess what? If all it does is double over the next 30 years, In 30 years, you will have $1 million because the asset has doubled up from 500 to $1 million. And now it's been 30 years, so it's fully paid off because your mortgage is gone.
Yeah.
So for how much? For 25 grand, you can have $1 million in 30 years.
Right. Yeah.
Guaranteed.
That's what I did for my first one was $1,000 a month, saved for 2 years. You know, it's took me living with roommates for a couple of years, but
That's it.
you know, I was just training myself for house hacking, I guess. So.
Exactly. Exactly.
And eventually I was able to own the building. So
I love it, man. That's great.
So was that the only one that you purchased before you left your W-2, or did you stack a couple more leveraging that W-2 kind of, you know, the better or easier financing, let's say, or did you use creative financing and just get out of the W-2 right when you had that taste of what, you know, the real estate life? Or
Sure.
tell us a little bit about the next steps.
Yeah, so I'm a go all in kind of guy. And also I was 26 with no money, experience, or assets. And so I figured I'm going to give this a year, just like I gave the last two businesses a year. And if I fail, then what's the worst that could happen? I'm a 27-year-old now with no money or experience or assets. It's the exact same thing, right? A 26-year-old, 27, it doesn't matter. So I have nothing to lose. So I figured, let's go all in, because I didn't have a family. I didn't have a pet. I didn't even have a plant. I just had me to figure out and a dream to pursue. This isn't for everybody.
Right.
If you're in a different life stage, life situation, there's other ways to go about it. But for me, I went all in after just buying one property.
Yep.
And I figured I found the first deal, I can find more deals. So the second deal I found on market, negotiated a bit, and I knew it was a good deal because I ran my numbers. There's built-in equity. There's cash flow on the back end. It met all my criteria. Central Tacoma, under 500,000, with cash flow, with value add, right? And so the problem is I don't have a job anymore. So how do I get an owner-occupied loan? I already got one like 2 months ago, right?
Yeah.
Okay, well, I have a brother. I was like, hey, Ludic, you're going to live here. Okay, we're going to buy it. You're going to sign on the loan. I'm going to do all the work. And you're going to move in once we're done. It's a fourplex. It's going to be really nice. It's going to take a while to rehab, but it's going to be really nice. He's like, I guess. I was like, look at the numbers on this deal, right?
Yeah.
Look, it worked great. Here, look at the equity, look at the cash flow. Now look at the equity and cash flow that I have projected on this deal. And so I built confidence through execution. How do you become confident? You're not confident immediately in the beginning. That would be ignorant. You have to first just give it a shot and execute, and then the next one's easier. The next one's easier. The next one's easier. And so the third one, I'm like, well, I'm still just focused on my fundamentals. I'm focused on my buying criteria, and I'm focused on built-in equity, under market value, value add, cash flow, just the basic principles of investing.
Right.
And so I find another one, a triplex. And I'm like, shit, I don't have a job though. How do I get a loan for this? Like, well, I have a mom. And so I was like, hey, Mom, I need you to sign on this loan for me. She's like, what? What are you talking about, Ashu? I'm not doing that. I was like, Mom, just look at these numbers. It's a great idea. All you have to do is sign these papers. She's like, okay. Right. And so owner-occupied loan for my mom. And so that's how I got my first 3 deals done. And guess what? I did that again and again.
Yeah.
I did that 5 times with just various people in my life
Right.
that had jobs because I no longer had one. So with every deal, there has to be, you know, the deal, the strategy and the operator, the debt and the equity. I couldn't really get debt, and I had limited equity or capital, right? But I was finding great deals, and I had great strategy, and I was a great operator.
Right.
And so because I had those first 2, I could find those last 2. So with every deal, like there's going to be those 4 pieces. If you don't have 1 or 2 or 3, but you're incredible at the first one or the first 2, that's fine. That's enough, right? You can find people that can bring other parts of the deal.
Right.
So the lesson there is buy equity by any means necessary, right? We were just talking about this earlier.
Yeah.
Alex Hormozy said, you know, rich people sacrifice everything and have success. Their success buys them some time. And then with that time, they fill it with weird habits.
Yeah.
And then they tell you that they got successful because of those weird habits, when in actuality, they're successful because they did whatever it took. And that's what I did in the beginning. I did whatever it took. As you heard, those are some odd ways to acquire real estate, is by asking your friends and family to sign on loans for you. But I did whatever it took because I knew I was confident in finding the deal and being a great operator. So
yeah, and you were, I think, an important takeaway there is you had proof of concept first. There's a lot of people that go out and will raise money from family and friends, or put themselves in a bad position potentially because they have no idea what 5 criteria are, what the numbers look like, the location that they're buying, how they're going to add value. They may not even have a clear plan. They just saw that, other people are doing it, or on Instagram, OPM is very popular, other people's money. But I think it's super important to have not only the confidence, but the competence before you go out and raise money from other people, and better yet, proof of concept of having done it. You didn't go and raise money from your mom for a mobile home park. You raised it it was a similar type of deal that you had already done in the same location, same ballpark, same plan.
Right.
So you were running the same play that you already knew was going to work, and your downside was hedged. So you knew that, you weren't going to lose everything. You weren't putting yourself or your family in a bad position, which is what a lot of people really, I think is important to know before people that don't have that experience go out and raise money from other people.
Fully agree. And as you well know from your own experience of raising tons of capital, incredibly stressful at times. Now, you have to treat other people's money with more concern and care than your own, because now it's not just money on the line. It's also like these people's livelihood and your reputation. And so, yeah, I fully agree. There has to be competence and confidence. And so I'm happy to say I've never lost money on a deal that I purchased. I have lost earnest money on a couple of deals, 25 grand, 30 grand, on speculative plays. That was my own money, but I've never lost money on anything I've bought, just by running great financial analysis and also having great mentors. Critical part of it the whole time. You think I was just buying these houses willy-nilly? No, here's my plan, here's my numbers. Hey, friend, mentor, that's 10 steps ahead of me. Am I crazy, or does this make sense? Right? And people get in trouble a lot when they either get a little too excited and just push forward without really getting a second opinion. It's really, really critical to have somebody in your space. You have mentors, sure, more than one, right? Whether it's in life or business, that are just really good at what they do and will be happy to give you a second opinion. You have to have the courage and the humility to ask for help, which is difficult. But the people that don't ask for help, don't get a second opinion, that's where I see bad deals done. That could have been prevented.
Yeah. No, a lot of people I've seen kind of get that deal heat, where you get something under contract, you really love it, and you kind of lose perspective a little bit. So having somebody that's outside, like a third party, objective, somebody that you can bounce that off of, and hopefully you have some feasibility time. I'm a big advocate for using feasibility to figure things out, because a lot of the time the best deals, if you're figuring that out over the weekend by, with your mentor, instead of even having the deal under contract, somebody else is going to go get that thing under contract with 14-day feasibility and spend the feasibility figuring it out. So, I think time is of the essence on the best deals. You need to be aggressive and you need to get those under contract, but definitely bake in feasibility in that time to where then you have a deal under contract. Use that to evaluate it. Don't lose the deal over the weekend while you're, thinking about it and doing all your research before you've even got the deal tied up.
Dude, that hurts for you to say that. Because I have lost multiple deals just being like, oh, heen and hawing, when I should have just tied it up and then figured it out. You're completely right. And now I know better, right? You have to think about what's important to the person on the other side. They don't care that you're thinking about it and considering it. All they care about is how do I get money in my pocket faster? How do I get some assurance that I'm going to be able to get out of this faster? Mm-hmm. So whether it's a wholesaler, they just want a fee. Just tell them what you can pay and figure out, say, hey, I need a 24-hour inspection. Here's what I can pay you.
Right.
Yeah.
Right. Have them get back to work and see if they can, work it down a little bit to get to your range. But
that too, exactly. Right. And so, yeah, I'm totally with you. Tie it up, figure it out. I always tell folks there's no pressure like the pressure of being under the gun of a contract.
Right.
Like if you only have a 3-day feasibility or a 30-day, it doesn't matter. Like you have to figure it out and make a decision. Otherwise, you're going to lose money.
Yeah. And how many people have come to you asking you to evaluate a deal that they don't have under contract and that they just, hypothetically would like to get your opinion on?
It happens sometimes. It's just not a great use of time. Because why? Like it's not for sure. There's nothing like the pressure of being under contract. So just do it. Just go put offers out with inspection contingencies where you have nothing to lose. And if it's not a deal, walk away before your inspection contingency ends.
Yeah, I will caveat that though with when you're first starting out and you've got, you want to understand what a good deal looks like. Super important to tie down the location, tie down exactly the product that you're looking for, whether it's a 2 to 4 unit or single family with an ADU or whatever it is, and understand what those are going for, what the rent is in the area, how long things are staying on market, ARV, what you could actually get if you went in and fixed up a property and sold it fixed up. So like when you're first starting out, you really have to dive in and underwrite enough deals to the point where like without even having to spend more than 2 minutes on it, that's a deal that's worth pursuing. Because if you don't have that foundational like expertise, then and that's really, you can't get to step 2 without first putting in that work. And first, like when you were going to Craigslist and when you were first starting out talking about understanding the numbers and getting that confidence, like you really have to spend the time and the investment to underwrite hundreds of deals, I would say, to just become an expert in what what you want to buy. And that'll make that whole process so much faster, so much easier. You won't have to spend much time on it. You'll know when a good deal comes up because the good ones are gone quickly.
Yep.
Even in this market with 8% rates, like
fully agree.
You might have 24 hours or less, might have 2 hours.
Yeah.
If you see something that's a deal that says reviewing offers upon receipt, that means, you need to jump on that thing if it fits your buy box and get that thing tied up and evaluate. Because even with 8% rates, there's still deals out there.
Totally. And there's tons of deals to be made.
Right.
Right now, I'm under contract on a subject to, and I'm under contract on Innovation. These weren't deals necessarily, but I made them into deals because of the right terms.
Okay.
So they want that high price. Sure, let's go. At my terms, your price, my terms. Right. So at 8% interest, you have to make deals more often than you can just pick them up easily and quickly.
Yeah. So, going back kind of to where we were, so you've got a couple of properties under your belt.
Yeah.
You've left your W-2.
Right.
One of the things that you've been able to do and that you're probably one of the best that I've met at this is you're a huge connector. You've created one of the biggest real estate groups, Facebook groups in the state of Washington for investors. I don't know how many deals have been made there. Now
so many.
There's a meetup, that happens once a month where you bring in some of the best and brightest, whether it's social media or people doing ADUs or syndications. You kind of bring some of these experts to the community and have another opportunity for people to meet and converse and network. And then you also have spun that off now to WARE University, which, is for a very reasonable price. You take people through a 6 to 8 week program and beginning to end, teach them how to evaluate deals, how to find deals. And really from there, they're able to go out and into the real world and, buy deals. And that's been a huge success for you. And I've heard great feedback from others that have attended that program. So like where did the idea from WARE come from and how did you kind of grow that to what it is today?
Sure.
Yeah.
Like I kind of mentioned or alluded to before, when I find something I'm interested in, I go all in. And so kind of when we met, I was just going to a meetup. Like I was finding every real estate investing meetup and going to it and just trying to see what's working for other people so I could copy it, right? Which is what you should do in the beginning, just copy successful people. So that's what I was doing. And I was going to all the meetups, but even then still, it wasn't, I wanted more content. I wanted more engagement in the space. And so I figured, well, I'll just add those 8 people I met at that last meetup, and I'll add Ian and Julie and a few other people I met at this meetup into a Facebook group, and then we could talk in there. And so I just randomly started adding people into a group and was like, hey, do you guys want to talk about real estate investing on Facebook? And they're like, oh, what is this? And I was like, oh, it's going to be awesome, I swear. They're like, no, okay, stop, get away from us. I was like, oh, okay, well, I guess I actually have to create value. I have to share my story. Even though I don't know anything, I have to make an effort, right? I have to at least share what I've learned so far. I have to share a contractor that was really good on my first project. And I have to share like, hey, there's always someone that's behind you. And of course, there's people always ahead of you. But even if you're just getting started, there's somebody that wishes they were in your position. So you have something to give. And so I just started sharing my story and trying to create resources for the community, even though it was a tiny community of like 20 people. Eventually, as I kept sharing, people continued to join. And now it's grown to 18,000 people. And it's a place where, gosh, hundreds of deals have gotten done for sure. We've raised $150,000 for charities through a winter fundraiser we do. I've taught real estate investment through the WARI Masterclass to over 200 people. Just got off a call right before I came to join you for this podcast. And it's been a week and a half. We have 2 properties under contract by students. Super exciting. Yeah. So it's just great to be able to give back to the community, teach investing principles, and most importantly, plug people into the network, right? And make sure they have the right players on their team to execute, because this is a team sport. You can't do it alone. You're going to do worse if you try to do it alone.
Right.
And so it's just been an awesome thing to grow an online community. Whether you're excited about real estate investment or cooking or flying planes, whatever it is, there's other people like you. And I think it's great to be able to connect with them online and translate that into real world in-person value as well. So,
right. And is that 18,000 people in Washington now, or is that national? It seems like it's got to be getting bigger.
Yeah,
expanding.
For sure. There's most of our users are in the state of Washington or in the Pacific Northwest, but certainly plenty from other states as well.
Okay.
Yeah.
Do you have aspirations to grow that beyond Washington, or kind of where do you see that going in the future? Or is it kind of organic and you like where it's at?
It's always been organic, but I've added more structure over time. And so, we do have a monthly event, and I've got an amazing marketing and events lead now, Nicole. Shout out to her. She's great. She runs our event. Super, super wonderful. And, now there's like spin-offs like WARI Off Market, where people get off-market deals done that are trusted buyers and trusted wholesalers that have done at least 3 transactions.
Oh, okay.
And so there's spin-offs, and there's still opportunities. There's tons of opportunities here locally, of course. But I do have some ideas on growth beyond just what we're doing now. And I'm pretty excited to be working on a mobile home park masterclass that's coming out likely end of this year, specifically seller financing mobile home parks, because that's the majority of what I've done, and partnering with some really exciting special guys that are experts as well in that space. So watch for that coming out end of this year.
Okay. Yeah, that's exciting. I know you talked a little bit about mentors and how those were important. Did you have a mentor for when you got into your mobile home investing, or how did you kind of get into that road or go down that road?
Sure. So like you self-managed a lot of your units.
Yeah.
And you probably still do self-manage quite a. Do you manage all of them? Or?
18, and 18. Then I have a manager for 9.
Cool. Okay. So I was in a very similar position. I had about 15 or 20 units. I can't remember the exact number, but I was self-managing. It's good experience, especially if you don't have a job. Like, you better self-manage, because you're going to learn what you need to know about your own properties and about managing tenants and about contract law and all these important things. And you're going to save money, right? Especially when you're getting started, it's like, it makes financial sense. it doesn't make sense now for me to manage mobile home parks that I own in Eastern Washington or in New York, of course. But in the beginning, definitely self-managed. And so I was self-managing because all I own is rentals in Seattle and Tacoma. And 1 month, I had 3 washers break. And I just had to deal with that. And it was just a headache. Like, I was like, how do they just keep piling on? This is a nightmare. And so I was like, man, I love real estate investment and I love the cash flow I'm getting from these properties. I love the appreciation, but I sure would love to own less things. So that was one part of it, is like, how can I continue the cash flow, but own less? Cash flow more, own less. That's one concept. Another one is I was scared of upcoming recession. So between 2010 and like 2019 was like one of the longest bull runs in American history, and also like one of the biggest kind of upticks in terms of economic growth and stock price growth and real estate growth. All of that was just like on this uproar. And I was like, this is not going to last forever, right? In America, we have a recession on average roughly once every 10 years. And so I figured recession is coming. How do I take my experience in investing and, reduce my risk and try to hedge the risk of a recession? And so I looked into uncorrelated asset classes, which are specifically assets that do not move exactly with the values of single-family homes. So they are uncorrelated to the values of single-family homes. So if single-family homes are going down, these don't necessarily go down. And so those are self-storage, mobile home parks, RV parks.
Okay.
So at the top of that, I kind of looked into these at a high level, and RV parks are generally the highest return. Like, you can buy 12 and 14 caps in RV parks, but it's also the highest operational input. I was like, that's not for me. I had an Airbnb and it was just not quite for me. And in the middle are mobile home parks, definitely longer term tenants, and kind of in the middle of the road cap rates. And then at the bottom was self-storage. It's a lot more consolidated, right? There's big national brand storage companies, and so cap rates are really compressed. So the returns are lowest, but also the operational input is lowest,
right?
Because you don't own houses, you don't have to deal with people, you just deal with people's stuff. That's easy, way easier. There's not landlord-tenant laws. And so I picked the middle because I was interested in affordable housing, and I liked the long-term tenancy, and I liked that I didn't have to own the homes. I just own land and utilities. If you do mobile home parks right, you don't own the homes. You just own land and utilities. And last time I checked, land doesn't break, which is great. So that's how I chose mobile home parks, and that's when I started buying them. And now we're up to 7 communities and would love to buy more.
Wow.
It's a great asset class. We have 225 cash flowing units and continue to be on the hunt for more. We're under contract on a few parks right now. We're assigning to other investors.
Okay.
So we do that as well, just to bring in income so we can buy more parks. Right. You got to have some kind of job or income that you can fund your investments with. And so that's what we do. We assign a lot of our parks, and then we close on the ones that we like the most or that fit our buy box the most.
Right. Is there a minimum cap rate or minimum criteria that you're looking for on ones to keep? Or does it also matter, I guess, how much capital you have at the time? Like I'm running into myself. There's some deals that I'd like to take down, but, have so much that I've just spent that I got to be patient and, wait for the right time. But I'm just curious if you have minimum criteria or...
For sure. Yeah, we have criteria. We have a buy box for mobile home parks that are demographic related. So the metropolitan statistical area has to have 100,000 people or more. The median income has to be above $40,000 because we don't want completely poverty stricken places. Like, there are places that the median income is 20 grand, but that's just not the kind of problems I'm ready for. So we look for at least 40K on the median income, and the median home price we like to be above 200K.
Okay.
So that way there is a discrepancy, and there's an actual between renting a house and owning a house. So if the house price is high enough, like in Seattle, you have a bigger tenant population. And so I want there to be a supply of tenants, right? So that we don't have a unit go vacant and there's no one to fill it. In Seattle, you're always going to have tenants because housing is incredibly expensive. In places like St. Louis, you can get a house for 50 grand sometimes, like in a war zone, but still 50 grand for a house. Like, what's the mortgage payment? Under $1,000, right? $800.
Right. So
And
you're looking for a little more of a spread, maybe.
Exactly. So those are demographic criteria. Pretty simple.
Yeah.
And then for a park, we look for at least 40 spaces out of state. I would do as small as 20 spaces in state. Our smallest park is 26, but it had upside to add more. And we don't really look at going in cap rate. I don't really care what the going in cap rate is. We just look at what is the value add opportunity. What is it going to be after a year of value add, right? If I do some infill, if I raise the rent to market, if I clean up the community, if I remove, drug dealers or people that are causing crime or causing issues for young families that want to be there. If I remove those folks that are not paying, like what does the numbers look like then? I don't really look at it like, oh, if I do nothing, what does it look like? I don't care because I want to do something. I want to add value. And so is there a specific cap rate? To answer your question, not necessarily, but I like to stabilize between an 8 and a 10 cap for these communities that are, primarily tenant-owned homes, somewhere between 20 and 60 spaces, and there's some value add there. I want it to stabilize between an 8 and a 10 cap after about 18 months of work.
Okay. Yeah. When you mentioned the mobile home parks, originally I was thinking like cash flow play primarily with little value add, just because if you're not owning the home, I was curious, is, the value add, it sounds like it's largely operational, raising rents to market. You're finding a worn down building, mom and pop owners that have owned it for a long time, landscaping, getting the wrong people out. So it sounds like it's more operational in nature in terms of that value add opportunity, since you aren't, going in and, doing cosmetic updates to the units themselves like you would in maybe a multifamily or, single family home.
Sure.
That's interesting.
Yeah, it's a little bit different. I mean, there's just like multifamily or single family, there's a broad range of value add you can implement. It can be, like you mentioned, kind of strictly operational. I mean, if you think about a single family home, if you don't want to be good at construction, you don't have to be. But you better add a ton of value through leasing operations like Airbnb or furnished rental or room right by the room. And there's all these other ways to add value. And so with mobile home parks, you could just add value through operational inputs. But you can also kind of add value through construction. So we've done, we've fixed major sewer and water, like $20,000, $40,000, $50,000 jobs.
Wow.
Right? There could be failing systems that you can improve and replace. And also we've added homes. We've added many homes to our parks. And so that's a huge value add, is just increasing the number of units. I mean, think about if you bought a 4-plex and you could turn into a 7-plex. How cool would that be? Right? And so we do that. We add homes. We bring in electrical and septic or sewer and water lines and do the engineering and the architecture and the survey and figure all of that to add more units, as many as we can fit. Of course, we want to optimize the number of units so we can increase our top line. There's all sorts of value add with mobile home parks.
Yeah, the one of the interesting things you brought up in terms of the number of people in the location, and I've found personally, and we've talked about, I think, in the past, is not only are you looking for those number of people for the tenants, but also the managers. And I would imagine I would imagine some of these mobile home parks are a little bit heavier on the management side, such that, if you do go to those very tertiary markets and you're not able to rely on the manager in those markets, you're going to compound the lack of tenants with the lack of options when it comes to management. And I don't know if you want to talk about that at all, or how that's kind of guided you to some of the criteria you have now, or
for sure,
from a management perspective, just so people that don't know anything about, mobile home parks, or kind of how you've made that work for you.
Yeah, I mean, absolutely stick to your criteria. So, if the MSA, the Metropolitan Statistical Area, if you don't know what that is, just Google it and go to bestplaces.net and you can look it up. If the MSA doesn't have enough people, just don't invest in that area. And so, I've done some of that, and it hasn't worked out in terms of it's difficult to find good help. If you want subcontractors, you want to do tree removal, there might only be one guy if the MSA or the area is too small. And so, yeah, I've felt the pain of that personally. And you deal with it just like anything else. And I have mentors that are far more successful than me that have also fallen trapped to this, right? They're just like, the deal looks really good. And it does look good on paper until like you deal with the operational headache of not enough humans to support the asset. So stick to your criteria, make sure you buy in areas that are big enough from a population perspective. And more importantly, I think, have a positive net migration growth, right? So more people are coming to the area as opposed to moving out of the area. You don't want to catch a falling knife. Don't be a hero.
Right. Yeah. No, that's helpful. So looks like we got a couple minutes left here. One thing I want to make sure we touch on, I got the mindset sweatshirt on, and I know, having known you for almost 10 years now, been around you a lot, one of the things that attracts me to you, and I know everybody else that works with you is, the way that you've been able to build community and kind of how you just show up with such an abundance mindset.
Yeah.
And we talked a little bit before about, whether that's something that's learned or whether that's something you've always had, because it just seems like the more you do, the more you're putting out and giving back to the community and giving back to other people around you, right? You got to admit you're attracting more and more into your life, and, you're having all the success in the world now, and super proud of you. So maybe just speak a little bit to, how you like to show up from an abundance mindset, and, how that's important to you kind of, personally, and how you show up.
Sure. Yeah. Thank you for the kind words. It's just been great to know you, because I think we've been on a similar trajectory, and we've had ups and downs at similar times. And it's been awesome to watch you grow as well. So thank you. And in terms of mindset, you have a choice, right? We are going to be working with other people. And so you have a choice to either, I'm going to make this person's life easier and better and maybe even happier by my actions, or I'm going to make it neutral, or it's going to get worse. I mean, like, if you take no action, that's an action as well, right? And so if you don't do anything, it's probably there's going to be a neutrality there, or maybe because you don't take action, something is going to get worse. So I think it's just like making that decision every day to contribute value, to add value, because your other options are worse than that. Right. If you give and you contribute and you make it better, I feel like that's the only option. Right. And so, of course, I've had times in my life, and I still do sometimes. Not everyone's 100% on every single day. We all make mistakes, right? We're all commit kind of sins of inaction, where we don't contribute in the way that we should, or that we know we can. And I think the more important thing is just sticking to, hey, I'm going to add value to this situation, to this person, to this community, whatever it is. I think it's critical to choose the right path. Right? What else is there?
Yeah, no, I mean, you live it every day, so whatever you're doing is working. So, keep it up, keep leading by example, and, keep leading from the front also. You're not telling people what to do, you're showing, how it's done, and people can follow, and you're creating an opportunity for people to join the community. And so
I'm trying.
Much appreciated.
I'm trying.
One question I like to finish with for all of our guests here is, why do you love real estate, Jan?
So many reasons, but I love real estate, Ian,
yes,
because it is the most simple and structured way for the average person to create wealth and create abundance in a community. There is no other business that I'm aware of that's as structured in terms of having a simple blueprint of buying assets that you can add value to under market value, that are going to produce some kind of a return, and in the meantime improving those assets, and in the meantime creating a vision for what you want those assets to look like and act like and be like, and how they will be used over the next 20, 50, 100 years. It's so cool that we even have the opportunity to define what we want to do and go chase after it through real estate investment. Right. And so that's why I love real estate.
That's awesome. Completely agree. And yeah, I'm glad we found it.
Absolutely. I don't have no idea what I'd be doing otherwise, honestly.
For sure.
Yeah.
Well, how would our viewers or listeners find you on social media or Facebook?
Sure.
Yeah.
Yeah. Best way I would say is Facebook. You can go to facebook.com/groups/WAREI Wari. And on Instagram, my handle is @growwithjan. So,
all right, guys, go follow him. It's a good follow. He's just going to continue to grow, continue to lead by example, and grow the community around him, do big things for him, his family, and the community. So thank you, Jan, so much for coming on today. I had a great time talking to you and really appreciate it. We'll see you around.
Thank you, Ian.